Welcome everybody to this special episode of our weekly interactive Bitcoin show. We're very honored to have Mr. Andreas Antonopoulos as our guest today. He's the author of the book Mastering Bitcoin and is one of the best spokespersons that the community has. My co-hosts are economist Tuur Demeester and of course also blockchain expert Jop Hartog and Annet the Boer, who's responsible for the most Bitcoin-friendly city in the world, Arnhem in Holland. I know we have a lot of people watching this show live today, and I urge them to use the Q&A tool to ask Andreas questions. And the best and or most popular questions will be addressed later in the show. We have like half an hour, maybe slightly more. Yesterday I watched Andreas for 3 hours on the Joe Rogan show, and I can tell you that almost made my wife divorce me, so let's try to keep it within the 45 minutes or so. Andreas, first of all, thank you so much for all the education you've been providing to all of us when it comes to Bitcoin and making the world understand how important blockchain technology is. So thank you very much for that to start with.
Well, thank you so much for having me on the show. I'm really excited. As I mentioned to you previously, I'm a huge fan of the Netherlands. I've been to Holland more than a dozen times and visited most of the biggest cities in Holland, and I certainly hope to come and visit again soon.
Yeah, you even went to a famous cheese town. Do you remember the name of the town? Because
I've been to a number of them. I was touring by motorcycle around Holland, and every time I'd find a city or a town like Gouda or Edam or Emmental or whatever, I would stop, take a photo. I'm pretty sure all those are Dutch cities. But anyway, any cheese-like city, I would stop and take a photo under the sign, which is obviously something very silly that only tourists do, but it seemed like the right thing to do.
I was born in Gouda and I lived most of my life there, so I'm very honored. You should send me that picture. So first of all, you're half Greek, so I was wondering, what is your opinion on the whole situation in Greece right now? And do you think Grexit, so Greece leaving the euro, is likely or even desirably? And is it a chance for Bitcoin possibly?
Yeah, what's happening in Greece is that for a while now, the main political parties that existed before the crisis have supported extreme austerity measures that have gutted the economy in order to pay off the Greek bonds. Now, Greece, because it's in the euro, has lost one of the most important monetary levers, which is the ability to reduce interest rates in order to shore up the economy in a time of crisis. And without that control, the austerity has literally gutted the economy. So in the recent weeks, there was an election for the president, the constitutional president of the republic, which is almost an honorary role, kind of like the Queen of England. Doesn't have much power, but if that election fails to reach a supermajority, they have to call national parliamentary elections, and that's exactly what happened. They failed to reach a supermajority. And in the next election, at the moment, the Syriza party is polling ahead, and the Syriza party has said that they will end austerity and come back to the table with the Europeans to negotiate a settlement, which will involve some form of debt forgiveness. So basically, Greece is now putting on the table and saying, look, if you don't write off some of this debt, we're going to exit the euro. And quite honestly, I don't think that's going to happen. I think merely the threat of exiting the euro will be enough, and already we're seeing from the German Bundesbank and others whispers about managing the situation by accepting a partial write-off. Now, about 83% of Greece's public debt is held by other national governments in Europe and national banks and central banks in Europe, not individuals. And so yeah, this is basically going to force a renegotiation of the debt. We'll see what happens. It's going to be a very interesting period because essentially the idea that the euro crisis is over is a joke. It's far from over. In fact, it's only grown since 2008.
Yeah, what about your friends and family in Greece? Do they support the euro or do they want to leave the euro?
I don't think anybody in Greece is really, it's not a matter of supporting the euro or leaving the euro. It's a matter of the austerity measures that have been imposed on Greece have destroyed the entire middle class. and unemployment is at ridiculous levels. And so the current path that was negotiated with the European Union is not sustainable. Um, as with many other countries, what's happened is the bankers got a bailout, the national government got a bailout, and the people got shafted. So
Yeah.
I don't think most people support the current situation. Now, whether renegotiating the debt will require an exit from the euro or not, really, that's a tactical question.
Yeah, but like in your ideal world, do we still have national currencies, or we just stop with central banks and only use voluntary currencies like Bitcoin?
Well, that remains to be seen. I don't think we're going to see a big impact for Bitcoin or transition to Bitcoin. It's relatively unknown in Greece. It's not really the kind of place where there'll be a massive exodus to a cryptocurrency at this point.
How come people in Greece are not using cryptocurrency so far, or, compared to, for example, a country like Holland?
Well, there are small pockets, but generally Greece tends to lag behind on issues of technology by about 5 years, so it hasn't yet reached a level of adoption that's going to be meaningful in these discussions.
All right. I live in Ecuador, and they're going to launch their own payment system, which is not yet a currency. It's basically the dollar, but then they make it digital, and they allow people with feature phones and smartphones to transfer dollars from phone to phone, and everyone has a phone here. So basically, it lifts a lot of unbanked people then out of their situation that they can't pay electronically. So in that sense, I guess it's good. But what do you think of those developments? And is that a threat to Bitcoin, or do you see a certain synergy between those new government schemes and cryptocurrencies?
I don't think it's a threat at all. I think, in fact, what it is a training opportunity. It teaches people how to use mobile wallets. They're going to use the Ecuadorian payment system on their mobile phones, and at some point they're going to be exposed to the possibility of using Bitcoin as well as their Ecuadorian payment system, and then they'll be able to compare the two, and they'll notice, for example, that one can be used for completely international commerce without any barriers, without any fees, without any currency controls. And the other one will be severely restricted and only be used internally within Ecuador. So I don't think walled gardens threaten Bitcoin. Open standards, when competing directly with closed systems, tend to win because they provide more value for each node in the system. So just like CompuServe introducing email and AOL introducing email without being connected to the internet to millions of people here in the US in the early internet age, that was great for the internet because once they got a taste of email, then they wanted it, and eventually they figured out that the internet email was the one they wanted. And very quickly, both AOL and CompuServe were forced to convert to full internet email. So I don't think this is a threat. I think it's an opportunity. Just like Apple Pay and other competing systems, all of these systems, what they do is they familiarize consumers with the idea of mobile wallets, and then given the choice between a mobile wallet that is closed and a mobile wallet that is truly global, not controlled by governments, with no currency controls and international in scope, people will choose the latter.
Sure. Tuur, you were wondering about some of what Andreas, or what you also experience at conferences nowadays with the price going down and the general sentiment. Is that something you want to elaborate on? You're still mute.
Sorry, unmute. Right. I was curious. Yeah, it's been a couple months that I've been to the last Bitcoin conference. I'm getting back up to speed, but Andreas doesn't take a lot of breaks. So I'm curious. Yeah, what do you experience on the ground? How are people talking about what's happening with the price and like with the kind of activity? Like, are the companies still surviving? Are they profitable? Are they growing? Which companies do we see are maybe in a little bit of trouble? We heard recently there was an exchange that closed down. So yeah, I'm curious. What are your thoughts? What do you hear on the ground?
Well, this is rather interesting to me. Is this essentially two perspectives on Bitcoin, especially if you look at how the media is covering Bitcoin. 2014 is described as a bad year for Bitcoin purely based on the price decline. There's like, oh, well, Bitcoin is down to 25% of what it was at the beginning of the year, which is true, except for it was up 56-fold on the previous year, and they forget to mention that. So, the price to me is volatile, will continue to be volatile. It's finding a new equilibrium point, and I don't think there's any major threat that the price will go to a point where Bitcoin becomes unusable, because Bitcoin continues to be useful even if a Bitcoin is worth only $1. The main thing that's happened, though, in the Bitcoin space over the last year is consumer adoption on a fairly large scale, broad brand awareness and awareness of the name Bitcoin, which has reached more and more people over time. A massive deployment of multi-signature technology, a massive deployment of hierarchical deterministic wallet technology, a blossoming in the area of mobile wallets. We started out the year with maybe 1 or 2 broadly deployed mobile wallets. Now we have more than a dozen very, very good wallets. We started the year with maybe 2 exchanges that were viable. Now we have 24 exchanges with quite a bit of liquidity. And we started the year with a handful of startups, and now we have hundreds of startups that have hired thousands of people developing on Bitcoin, using it as a platform and building upon it. We've seen the launch of Bitcoin 2.0 companies. As a technology, Bitcoin has absolutely thrived in 2014. It's stronger than ever. The amount of hashing power dedicated to securing the network has grown immensely. All of the important metrics, except for the price, have been trending upwards and at a very rapid pace. So I think it's important to look at that. If in the early days of the internet we had a price against that to measure adoption, it would have probably been disappointing, and people would have been writing obituaries. In fact, they did write obituaries about the internet. There's a beautiful site called bitcoinobituaries.com where you can see all of the obituaries written over the last 4 years for Bitcoin. The only problem with this attitude is that Bitcoin refuses to die. It is a relentless anomaly in the system. It refuses to conform, it refuses to be regulated, it refuses to just go away. And you turn around after reading the 100th obituary, and guess what? Bitcoin's still there. All it has to do is continue to survive and continue to grow adoption, because everything that's added to the Bitcoin ecosystem increases the value of the entire ecosystem. If one company creates innovation, every company in the system gains from that innovation. And that's the advantage of an open system, and the reason why an open system and an open network like Bitcoin will innovate faster, will deliver more value to each of the stakeholders, the users, than a closed system. And as far as I'm concerned, things are going absolutely great. The price has been disappointing, certainly if you joined Bitcoin in the beginning of 2014 or towards the end of 2013. For those of us who have been in Bitcoin for 3 or 4 years now, we've seen this before. We've seen it go up, we've seen it go down, we've seen it go up again. I bought my first Bitcoin at $7. I can tell you, it looks pretty good from my perspective. So I think it's important to take a long-term. You have to take a long-term vision with Bitcoin. This is still a 5-year-old technology. It's barely outside its infancy. And from a technology perspective, Bitcoin is stronger than ever.
How do you counter people that, for example, that bought earlier this year when they listened to you or any of the other presentations, or when they went to a conference and they bought it for a few $100 or maybe like $600, and now they could, because sometimes I listen to these people, they say, well, I bought Bitcoin, it was $600-700, I shouldn't have listened to you, and now it's worth half. How do you counter those arguments typically?
Well, if they did listen to me, what I have been saying quite consistently is to not buy Bitcoin as an investment. The best investment you can make in Bitcoin is to develop your skills, to learn how to program in Bitcoin, how to use it as a platform, to learn the technology, to use it in real life. And if you want to invest only a small amount and invest for the long term. If you're disappointed after 1 year because of your investment in Bitcoin, and if you put too much money in Bitcoin, then you weren't listening to what I was saying. So I think it's important to look at the long term. This is still a technology that it's in infancy. The banking system that it's competing with has existed for hundreds of years and developed for hundreds of years, and certainly has had its own share of problems and bankruptcies and fraud and things like that. And so, I don't think it's unexpected to see a new technology like Bitcoin go through some volatility and some ups and downs. If you did buy Bitcoin at the beginning of the year at 600, then you should have bought only a small amount as part of a diversified portfolio, and you should probably hold on to that and see how things play out on a 3 to 5 year period, not on a 12-month period.
Right. Earlier you said it's important to develop your programming skills. We have an interesting question from one of our listeners, Mike Putter. He has a few blockchain Bitcoin ideas with proof of concept as showcase. I have no idea how to commercialize on it or to find funding for further development. Any advice?
I think build a prototype. Bitcoin is a kind of space where if you build a prototype application, you have an instant global audience that can use it in any country. And if you build a prototype and it works and it adds value, you'll have adoption and the funding will come. I think funding a Bitcoin company is not very difficult. What you need to do is first build a product that works and get it out to people so they can try it and use it. And if it solves a real problem, then the funding will come. There's plenty of people in Bitcoin who have Bitcoins that they want to invest, who can invest in companies like that, as well as an enormous amount of venture capital funding, angel investment funding, and all kinds of other investment have poured into Bitcoin. We're already seeing investment in 2014 in Bitcoin exceeded the total annual investment in 1994 in the internet. So in terms of a nascent technology, funding is the least of the problems you have in Bitcoin. Most of the problems have to do with finding the technical skills, hiring the developers, finding people who understand Bitcoin to implement your vision, and then bringing a product to market and executing with focus on your vision. I find that a lot of the startups I talk to have a very big difficulty achieving focus and keeping their focus on their core product because they're pulled in 1,000 directions. Every person who tries out their product says, "Oh, that's nice, but what if it did this? And what if it also did that?" And before you know it, you've tried to ram 56 features into the product and you've completely lost focus. So if you have a good idea, if you can build a prototype, and if you can execute with absolute focus on one idea and do it well, I think the funding will come.
Right. Well, talking a bit more about adoption, Annet is also here. Annet, you're partly responsible for the great success of Arnhem, which is the most Bitcoin-friendly city in the world. So we're all very proud of your results there. You have some questions to Andreas with regards to adoption, right? And how to basically stimulate real-life Bitcoin use. Can you elaborate on that?
Yeah, well, for instance, I was curious, Andreas, do you also think that Bitcoin is tend to be used in real-life situations as a point of sale payment solution, or more as an internet coin?
Yeah, I'm not so sure that Bitcoin is very easy to use at point of sale. My personal experience has been that it is much more useful for online e-commerce websites and for buying things online. Buying things in person, it tends to be a bit clumsy. I think we're going to see a massive improvement with the implementation of the payment protocol, which is Bitcoin Improvement Proposals 70, 71, and 72. Those allow for much more seamless interaction between a merchant and a customer, and you can implement that over NFC or low-energy Bluetooth, Wi-Fi, or a number of other protocols. I'm not quite sure that the whole scan my QR code and send a payment is convenient enough for the typical retail small value transaction like buying a cup of coffee or buying a small piece of crafts or arts or something from a bakery, that kind of retail commerce. However, I think there's always room for people who are fascinated by the technology to use it in real life as an experiment. So most of what I've seen is really experimental at this point of time. I use Bitcoin almost on a daily basis. I earn most of my income in Bitcoin, so I try to use it as much as possible and not convert it back to dollars because that saves me money. But that makes me an exception. I would say the majority of Bitcoin users are probably not using Bitcoin on a daily basis. It's just a matter of time. I remember, again, if you do the comparison to the early internet, when I had an email address, nobody even knew what email was, and at first it was very difficult to find anybody else who had email to communicate with. And it took quite a while until it became a mainstream technology. I think Bitcoin's adoption is progressing very well, but I'm not sure retail is the killer application that's going to launch Bitcoin. I'm much more interested in areas where the friction of transaction is much higher. Quite honestly, Visa and MasterCard do a pretty good job of helping you buy a cup of coffee. It's not difficult to buy a cup of coffee. In the Western worlds where people are banked and they have a Visa card, buying a cup of coffee is a lot easier using a credit card. Try sending money to Lagos, Nigeria from London, and then you find some real friction and some really high costs. And I think those are the areas where Bitcoin can shine.
So, but that's only if you look at how to use it in that real life situation, but not in the subject of the needing a confirmation or not.
Well, I don't think for most small value retail transactions, I don't think you need a confirmation. You don't need to wait 10 minutes in order to get a Bitcoin transaction to work. There are different technologies that can be used. If you have a properly signed transaction and you can check that the inputs haven't been spent already and it's propagated across the network well enough, the chances of that being double spent are pretty low, and the risk of double spend is pretty low. Most retailers, if they're selling a small value item like a cup of coffee, will be willing to take that risk in the same way that they're willing to take the risk of a chargeback on a credit card by not obtaining a signature for small amounts. And so I think we're also going to see Bitcoin payment processors offer some basic insurance services whereby they will cover the risk of a zero confirmation transaction, and once the merchant processor sees that the transaction is propagated, even with zero confirmations, it will guarantee that amount and then just handle it as an insurance risk.
And do you think sidechains can play a role there to possibly we have a separate sidechain for micropayments where confirmations are faster and things of that nature?
Possibly. I think sidechains is still an academic topic, and until we see implementations of sidechains, it's hard to say exactly what you can do. It seems to me that nowadays people are using sidechains as a panacea. Like any problem you think you have in Bitcoin, let's introduce sidechains to the conversation and see if that solves it. And I think sidechains is a great technology if it's implemented correctly and it works. We haven't seen that yet. So for the time being, I would like to see what can we do today with Bitcoin that makes people's life easier, that has an impact on the life of people today. And I think for that, we really need to look at the unbanked, the underbanked, cross-border transactions, foreign remittances, international trade, import-export, paying contractors or paying subcontractor companies in other countries. I think those are the killer applications where Bitcoin can solve some major problems today where there's a lot of friction and cost. And you don't need sidechains for that.
Because we have a question from Rico Brouwer, and he asks, so why isn't Bitcoin shining just yet in international money transfer market? And are people sending money home already? Are big companies sending money internationally? What needs to happen to make it more mainstream adopted in that area?
Western Union has been doing international money transfer since 1896. Let me repeat that, 1896. Now, I think to put in perspective, Bitcoin is 5 years old. So the argument of, come on, hurry up, solve the problem.
6 years, right?
Quick, 6 years. Do what others have done in 114 years now. I mean, it doesn't work like that. Even though it is possible to do, it takes time to deploy the infrastructure, to develop the applications. Multi-sig technology is 1 year old. We've got great adoption of that, but still, we're looking at very early days. It's going to take several years before we see Bitcoin having a significant impact in the remittances space, because there's two aspects. It's not just a technology problem. The networks of remittances and the channels of remittances are established with specific communities and specific cultures, specific ethnic groups, and have been established for centuries. And so, it takes time to disrupt a market that is that well established. I think Bitcoin has tremendous potential in those areas, but let's not assume that Bitcoin will shine from year 5. Most people hadn't heard of it last year, so we need to give it some time and be patient with the technology. The potential is there. We just need to keep working on improving the user experience, making the security easier for people, helping people understand the technology and developing new applications. And it will happen.
So, like Lieke de Vries asks, to a certain extent, one can compare the evolution of Bitcoin to the spread of TCP/IP and the internet as a whole. And I think you also, Andreas and Tuur and others, make this comparison. But to what extent does Bitcoin actually compare to the internet revolution, or does it develop quicker, maybe even?
Well, I've said before that I think Bitcoin will develop a lot faster than the internet. It took about 20 years from the day I got an email address until the day my mother got an email address. And I think in Bitcoin years, we're probably going to do it in 8 years or so rather than 20 years. And the reason for that is because we don't need to deploy infrastructure, we don't need to create a mobile revolution. All of those things have already happened because of the internet. So adoption of Bitcoin is a lot easier. It's simply downloading an application. What we need to do is work on better user interfaces and user experience. But I think we're going to see Bitcoin's adoption progress and become mainstream and massively disrupted for a lot of industries much, much sooner than the 20 years it took for the internet to do that.
Yeah, I think the evidence is already there.
Yeah, absolutely. And not just that, we also have to think about what Bitcoin is going to do to the internet, because keep in mind, the internet's disruptive wave hasn't ended. It's still going, and it's still peaking. And the first 20 years of deployment and mainstream adoption of the internet, and we've still only reached about 1/4 of humanity with the internet. And now we have the internet with a payment system and a currency that is just as open, with open protocols and APIs. And Bitcoin will actually accelerate both the adoption and make more useful internet infrastructure itself. So the two play into each other. The internet makes it easier for Bitcoin to be adopted, and Bitcoin fuels internet adoption even more so, because now an internet connection is not just a communication exchange, it is also a banking system. And so there's so much more reason to have an internet connection if you don't have banking facilities where you live. I think those two are going to work together in synergy, and we're going to see an acceleration of internet adoption just as we see an acceleration of Bitcoin adoption at the same time.
What are the main developments you expect for Bitcoin on a protocol level in 2015?
I think Tuur had something to say about internet and Bitcoin, but he was
muted
by
again.
his mic.
Am I
again?
Sorry, yeah.
Yeah.
I was just going to say that people don't realize, like, the 3 core protocols of the internet, FTP and TCP/IP, were developed in 1971 and 1974. That's like 40 years ago, and then only in 1995 was like the year when it became mainstream. And that's, I mean, Bitcoin is only 5 years old, the Bitcoin protocol, and we're already seeing mainstream players really being very open about it, supportive about it. So yeah, that's what I wanted to say with that. The evidence is already there that the growth rate is much higher.
Yep.
Good.
So what do I expect to see in protocol development? Well, there's a lot of exciting things happening. I think we're going to see more and more development of multi-sig technology. I think it's now fairly well established that it can work and is working. We're seeing about 5% of funds in Bitcoin now held in multi-signature addresses. That's a major milestone, only just about a year and a half since multi-sig technology was introduced. That's working very well. We're also seeing the hierarchical deterministic wallets, which allow you to have near infinite addresses in a structured fashion in the form of a tree, and yet be able to back up, import, export, or restore your entire wallet with just 12 or 24 English words. And that's an enormously powerful technology. We're also beginning to see the combination of the two technologies with hierarchical deterministic multisig, which is using HD wallets with multisig addresses together. And again, that's an enormously powerful technology, whether it's for personal use, for multi-factor authentication and secure use of HD wallets, or whether it's for corporate use and you're looking at using multi-signature for corporate governance so you can distribute the responsibilities and create audits and controls, checks and balances to protect against theft. All of those things are developing. You know, this is programmable money, and we're beginning to see some of the features that can be added to programmable money. And keep in mind, neither of these two features were part of the original Bitcoin. These are all things that were developed just in the last 2 years, and they show the flexibility of Bitcoin as an underlying protocol and its ability to support really interesting applications. I'm expecting in 2015, one of the things we're going to see is a lot more heavy use of the end lock time facility or feature, which is the ability to delay the execution of transactions and essentially post-date a transaction to a specific block or specific time. And together with multi-signature, you can do some very interesting programmable escrow with automated execution using the combination of multi-sig and end-lock time. Peter Todd has been working on an extended feature there called check clock time verify for enhancing the capability of end-lock. At the same time, we're going to see some optimizations beginning to happen in the protocol. I think we've seen the standardization efforts have succeeded quite well. Gavin Andreessen's main focus, according to what he's talking about lately, has been, sorry, let me just prefix, Gavin Andreessen is probably the most prolific developer. He's also the chief scientist of the Bitcoin Foundation and one of the lead core developers. He's been focusing primarily on optimization techniques. Most recently, he published a write-up on using invertible Bloom filters in order to cut down on the propagation time of blocks across the network to solve some problems of concentration and block size. Now he's written another article where he's talking about his own experiments in building 20 megabyte and 200 megabyte blocks in order to see how well the software scales. So we're together with, as of the latest version, 0.10 that was released a few weeks ago, you can now prune the blockchain and only keep a subset of the blockchain, which allows nodes to carry a much lighter load on the disk space. So we're beginning to see these optimization efforts come to fruition, which are going to allow the Bitcoin network to scale up in terms of number of transactions per second. People have been worried for a long time because there is an implied upper limit to the number of transactions that can occur. Now, the reason that limit exists is because the block size is limited to 1 megabyte, and that limits how many transactions per second you can put through the network, an absolute maximum of about 7 transactions per second in the smallest size of transaction. But that limit is entirely artificial. So we're already seeing efforts to raise that and see what impact it will have on the network and to make it possible to scale that up, and which is just in time because we don't need 7 transactions per second yet, But if we start seeing exponential adoption of Bitcoin and growth, then we will very quickly have a need for much bigger scale of transaction volume. So it's good that that work is happening now. I think 2015 is going to be a year of significant optimization within the core protocol, while at the same time most of the startups are going to be working on platform plays, which is developing new applications on top of the Bitcoin platform, applications that take advantage of multi-sig and HT wallets and lock time and other features
Right.
to offer novel applications, things that don't exist today.
And what about the Bitspend scandal we saw earlier, where around $5 million in bitcoins were stolen? Do you think, like, if exchanges would massively start using multi-sig and more of those features, then we can progress towards a more healthier exchange system?
Well, so I think the fundamental problem there was not one of technology, because at the same time, if you look specifically at Bitstamp, you have a hot wallet that's held somewhere between 9 and 10% of the deposits. But at the same time, if you look at the sum of the deposits, those were much, much more than the total volume going through the exchange, which means that people were using the exchange as a wallet. They were doing their exchange, their trading, and then they'd leave the Bitcoin on Bitstamp. That is a very bad idea. That has always been a bad idea, and it's shocking to see again and again that people don't learn the basic lesson, which is unless you control the keys, it's not your Bitcoin. Your keys, your Bitcoin. Not your keys, not your Bitcoin. Somebody else is in control. If you allow other people to take custodial control of your Bitcoin, then hacks and losses and thefts and embezzlement and scams and fraud are going to happen. The problem with the hot-cold wallet structure is that it doesn't scale. If, for example, you only keep, say, 2% of your deposits in a hot wallet, that means that you can only handle a spike in volume up to 2% of your deposits. Anything bigger than that, you're going to introduce delays for withdrawals, which are going to create a panic, which is going to force you to bring more of your funds online into a hot wallet. But even at 2 or 3%, a hot wallet can become enormous, especially if people are using the exchange as a deposit location. Exchanges themselves should encourage their customers not to keep their money on the exchange, because it increases the risk for the exchange. And so even if you had multi-sig in this case, I don't think it would really help, because once again, just in order to support the volume of transactions and withdrawals, Bitstamp had to keep a very large amount of its funds in a hot wallet, and that structure does not scale and never will scale. I'm hoping we're going to see more development in distributed exchanges, but that is not an easy problem to solve. It's a very difficult problem to solve, which is why we haven't seen any successful solutions. Again, we see this dichotomy. You know, Bitstamp is not an example of a problem with the Bitcoin protocol. It's an example of a problem with trying to use custodial accounts, which have always failed in the traditional banking environment just as much as they have in Bitcoin. If you
I'm curious to ask another question in relation to that, Andreas. I did some number crunching and looked at the Bitstamp volumes of last year and multiplied it by 0.3%, which is, I don't know, could be the average fee that they're asking. And based on that, their profits were around 15,000 Bitcoins last year. If you up the percentage to 0.5% per transaction, that would be 25,000 Bitcoins. So basically, it's possible that they've lost their entire earnings of last year with this 9% loss. That's not theirs. It was not their money. It was their customers' money. So do you think it's likely that they'll be able to make whole their customers, or is this going to be a long-term effort? I don't know. What's your take on how Bitstamp is going to be able to solve this?
Well, I mean, that's the problem, really, is that if you have a hot wallet that is that big, then it exposes you to risk. So, you know, even as I said before, the average hot wallet is going to be between maybe 3% to 10% of customer deposits. And any healthy exchange isn't going to have a profit margin much larger than that. So loss of the hot wallet means you lose a years of your profits. In most businesses, that will put you out of business. I'm hoping that with the right infusion of cash, and because of Bitstamp's, so far good reputation, it appears that this was not fraud, at least. I'm not going to make any judgments at this point because we can't jump to any conclusions. But so far, the indication is that this was not fraud, but in fact an external theft. And so I'm hoping Bitstamp will be able to weather the storm and rebuild from that. They may need some external investment in order to support their operational cash flow while they recoup this loss. But it's a terrible situation. And again, it shows the same thing, which is that customers keep making the same mistake, which is they entrust their funds to a centralized repository where they do not have control of the keys, and that is going to continue to fail. We're going to continue to see failures of that type again and again and again. If you give other people your Bitcoin, it's not your Bitcoin anymore.
Right. So we got a question from Joachim Baak asking, what would you say is the biggest risk for cryptocurrency at the moment?
I don't really know. I mean, I don't see any major risks for cryptocurrency. As far as I'm concerned, this technology is a superior form of money. It's a superior payment system. It works. It's efficient. It solves real problems for real people in the world today. And so from that perspective, I don't think there's anything that can stop cryptocurrencies from succeeding. The only question is whether they will succeed in the short term, or whether there will be some delay and it will take longer for cryptocurrency adoption to happen. But if this is a level playing field where the competition is between an efficient cryptocurrency like Bitcoin and a currency managed by a central bank committee of 12 wise white men who make decisions about the entire economy, to me the logical outcome is that the cryptocurrency wins. It's as simple as that. It's superior technology. Now, of course, in real life, when you introduce a technology like that, there's going to be resistance by those who have the most to lose by the introduction of such technology. There's going to be a period of time where it's difficult for the public to accept, and the mainstream to accept this new technology and to understand how it works and to absorb it into society. And there will be setbacks, thefts, frauds. Bad people will use Bitcoin to do bad things, just like they use dollars to do bad things. But the media is going to make a much bigger point when they use Bitcoin rather than when they use dollars. And so we're going to have setbacks like that. But again, as I said, in the long term, I don't think anything can stop this technology from succeeding. It's now proven to a very large audience that this system works and can scale, and that's all it takes.
Another question from Roland Greve, and this question also had a lot of votes. Are you worried about Bitcoin's fungibility? The Bitstamp hack shows that some people are calling for blacklisting of the stolen coins, and the pseudonymous nature of Bitcoins makes this theoretically possible. Are you worried about that?
I think blacklisting is a stupid idea. I think if we go down that road, it will threaten the fungibility of Bitcoin. But in order for blacklisting to work, it would have to be introduced in the core protocol. I can't imagine that that would be an acceptable change, either among the developers or by the miners. So if such a change was introduced, I don't think the consensus of the network would accept it. They wouldn't upgrade to that version of the protocol. So yeah, blacklisting is a bad idea. It won't stop theft, but it will create problems for Bitcoin fungibility in the long run. And the truth is that even if that money was stolen from Bitstamp, it's going to circulate back into the Bitcoin economy. It's not going to just disappear. and so it doesn't really matter. And I think we should just let it continue to circulate. We don't have a choice.
Right.
Can I ask you, Andreas, what's your if you look to the 2.0 projects or even 3.0 projects, what are your favorite ones on that level? Is it more the equity side, or is it more like improving government systems? What are the ones you're really interested in?
I find Ethereum and Counterparty to be very interesting in terms of the capabilities that they offer today. I think among many of the 2.0 projects, there is this almost naive utopian vision that government will be simply replaced by a small algorithm. And I think that ignores some realities of human nature, and also introduces some concepts which are rather dangerous, like, for example, universal identity for human beings. I think those are ideas that won't really find solutions very soon. However, in terms of automating contracts and creating more sophisticated programmable money and programmable financial instruments, I'm very excited about those possibilities. And I think that as we see implementations happen, because, realistically, we don't yet have major implementations of Bitcoin 2.0 other than Counterparty. I do expect, well, okay, I probably misspoke there because I don't want to just mention that one, but Counterparty, Mastercoin, NXT, blah 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 blah, and theoretically Ethereum, sidechains, and others. They're all exploring the ability of the Bitcoin protocol or other protocols to carry application layer platform capabilities on top, and I think that's a very exciting development because it really shows the implementation of blockchain technology as a base protocol for other traffic, and that's really exciting because I think that's really a distinguishing characteristic of these types of cryptocurrencies, that they're not just money, that currency is just the first application on what is the internet of money, and that other applications can be built on top.
Are you familiar with any of the decentralized rating systems, like Identify, Name? You got a few, I don't remember all the names. Is that something you look into and are very excited about?
If it's a reputation system that we're talking about, I think that identity and reputation systems are best implemented on a local level. And any attempt to build global identity and reputation systems will fall into the trap of trying to solve societal issues with technology in a way that they can't be solved. Human beings can't scale to do identity and reputation on a global scale. And such systems, I think, are really problematic in a number of ways, because part of the things that make reputation and identity workable for humans is the fact that we can forget and forgive, and machines never forget and never forgive, and that can create a very dangerous society.
Okay, thank you.
I'm mute.
No, you're not.
Okay, yeah, but at the same time, when it comes to global reputation, Andreas, you can still form, like, for example, after having this conversation, we can trust each other, and also we can express that trust in a rating that we give each other. So would it be possible, based on those interactions and real life trade and conversations, to build a solid global decentralized reputation system?
I don't think so, and part of the reason for that is because most machine-based identity and reputation systems assume, first of all, they assume unitary identity, that a human being only has one identity, and that identity spans every context of that human being, and that's fundamentally wrong. Human beings have different identities in different contexts, and the reputation metric that would be attached also assumes that your behavior today is predictive of your behavior tomorrow. And I believe in the inherent capability of human beings to change, sometimes to change for the better, sometimes to change for the worst. And past behavior is not always a good predictor of human behavior in the future.
Okay.
And
Well,
that's the fundamental problem with these systems. Because they're algorithmic, they assume continuity in time, which doesn't really apply to, a biological entity.
right. Okay, we have a few minutes left. We have a lot of questions. We cannot possibly do them all, but one of the most, let's just focus on one of the most voted ones. Henk van Tijen asks, already something you briefly addressed, but do two-way backed sidechains indeed make altcoins superfluous?
Theoretically. And that's the fundamental problem. We're talking about something that is entirely theoretical. I've read the paper. It sounds fantastic. I'll wait until I've seen code that actually works. Until then, we can assume that sidechains solve all problems, including global warming. Don't get me wrong. I'm a huge fan. I think sidechains are actually a fantastic technology that can introduce some amazing features. It's just that it seems to me that every problem we find nowadays, the answer seems to be sidechains, because it's almost like a Rorschach test. Every person sees whatever they want to see in that picture. It expresses all of their vision and desire. Because it's still a bit vague, we can assign to it all the characteristics that we want to. The actual implementation is not going to be as perfect as the paper. It never is. And will impose its own constraints and limitations. Once we know what those constraints and limitations are, we can make decisions as to which applications will be suitable for sidechains, whether they'll be suitable as an implementation as a complete different altchain or altcoin, and then we'll see where sidechains apply. I'm pretty sure you won't be able to solve everything with sidechains, but I'm looking forward to seeing an implementation.
Which altcoins do you own, by the way? Are you able to divulge that with us, or is it something you want to keep for yourself?
99.999% of my currency is in Bitcoin, and that's even counting US dollars. I own Bitcoin first, US dollars second, a bit of Namecoin, a bit of Litecoin, a bit of Doge, and I think I've got a few tiny fragments of maybe Purecoin, Primecoin, things like that. And most of this was donated to me. So the only coin I think I actually went out and bought was Namecoin when I was experimenting with the Namecoin technology in US dollars. Other than that, everything else has been donated to me as tips, and most of the time I just use it to tip back other people, or it's sitting somewhere on my Cryptsy account. But quite honestly, Bitcoin is risky enough as an investment to fulfill my risk appetite, and I speak personally in terms of my personal risk appetite, and therefore I don't feel the need to augment that with additional risk from even more volatile altcoins outside of Bitcoin. And so for every person it's different, but honestly, because I get paid in Bitcoin for a lot of the work I do, I end up holding a lot more Bitcoin than most people do, and I hold more Bitcoin than US dollars. So that volatility is just about enough, and as much as I can handle on a day-to-day basis. I don't need to add to that by day trading Doge or something like that.
Right. And with a question from Tim Pastor, what do you think that a decentralized internet can mean to our data when it comes to privacy and security? So things like made safe. What is your opinion on that?
I'd like to amend my previous answer. Sorry, I forgot. I also own quite a bit of Ether. So I did purchase Ether during the Ethereum sale because I'm very interested in using it to experiment on the beta. I already played with a proof of concept and I wrote some scripts and I enjoyed doing that. So I did purchase some Ether so I could play with the prototype when it comes out. What do I think of decentralization? I'm very interested in MadeSafe and other technologies that allow us to do better price discovery and resource allocation for resources that currently are not priced and not allocated, such as community shared Wi-Fi, community shared disk space, Generally speaking, I think the combination of what we call the sharing economy, whether that's Airbnb and Lyft or distributed wireless, Wi-Fi, bandwidth, storage space, CPU space, whatever that is, and the use of crypto tokens to allocate resources more efficiently, I think we've barely scratched the surface there. I think that will end up being a multi-billion-dollar industry that in its own right will be incredibly disruptive and will replace many existing industries with a much more efficient shared economy version. I do believe in the general idea of decentralize everything. I think decentralization is the theme of this century, and cryptocurrencies is simply an expression of that theme. And so using those to enhance the sharing economy and to do price discovery on resources that we already hold as individuals and use those to trade with others directly, I think that's great. Also, Marriott hotels charge me $15.95 for wireless, so fuck you, Marriott, because you're trying to block the other wireless services, and I'm looking forward to MaidSafe. That's just one more incentive.
Perfect. Well, almost running out of time, but I just wanted to also address the whole situation with women and Bitcoin. I know it's one of your hot topics, Andreas. You prefer conference, for example, where we don't only see guys, but also female entrepreneurs and developers participating. Well, we have Annet here, so maybe you guys can discuss among yourselves how come that there's still such a limited amount of women in the whole Bitcoin sphere.
Annet, why don't you go ahead?
Yes, yes. Well, I think it's in a way it's expected that women are in less numbers than men, because I think the audience that attracts to Bitcoin are either way the tech-savvy people, and in that area women are already less visible than men. And well, you have the groups of traders that are interested in Bitcoin, and I think that's another area where women are not so well presented. And well, people who are looking to invest in promising startups, for example, that's another area where women are not so well presented. So I think, well, the whole subject is a sum of all the parts where women are will tend to be less visible than men. But they are there. I know they're there. I'm not the only one, fortunately. And well, I also would like to thank you, Andreas, that you, as one of the role models in Bitcoin, have an active opinion on diversity. And I saw on your website that you don't even attend or that you don't even speak at conferences when they don't adopt an anti-harassment policy, for example. And I think that's very good to raise awareness amongst other people and, well, maybe make it a bit more welcome also for women to come and take a look.
Yeah, thank you so much, Annet. I have to say that my experience with this has been rather disappointing because once I started talking about this topic, I got two reactions. One was extremely hostile response from some of the male personalities in the space, including death threats and threats of violence. And at the same time, I heard from literally dozens of women telling me about their negative experiences where when attending a Bitcoin meetup or a Bitcoin conference, they have been harassed, dismissed, ridiculed, sexually assaulted, sexually propositioned, and treated in a way that is truly appalling and disgusting and awful. Part of the issue here, as Annet said, is that finance, libertarians, and technology are already areas where women are underrepresented, but they're also areas where some of the men in the space are actively hostile and or exploitative and or predatory towards women. And what that means is that the experience of the average person who gets into Bitcoin is very different depending on whether they're male or female. Males who enter Bitcoin generally find it to be an exciting space full of opportunity and interesting people. And women who enter Bitcoin go to these meetings, and they are received in a way where they are objectified, talked down to, touched inappropriately, propositioned, asked for dates, commented on their looks, all kinds of behavior that is really juvenile at best, and dangerously predatory in some cases. And for the most part, the organizers of these events turn a blind eye. Even when they're notified of these things, they tend to re-victimize the victim and eventually push women out of this space. So it's not just a matter of women being underrepresented, it's also a matter of this being a space that is actively hostile to women in many cases. So what I would encourage people to do is, if you have a conference, certainly if it's a conference I'm attending, I do not attend conferences unless there is not just a published anti-harassment policy, but one that is enforced, which has a reporting structure so that if someone is being harassed or they experience this kind of behavior, they will report it to someone who's trusted, someone who will take action in a specified manner, and who will follow the policy to exclude the harasser and not punish the victim again. Most of these incidents don't go reported because the people who are exploited are not in a position of power in this industry, and if they say anything, they end up getting kicked out of the group rather than the prominent person who harassed them. So I think this is still a relatively toxic environment. It has changed a bit in the last year. As Bitcoin goes mainstream, its values become more mainstream as well, and gradually we're seeing more and more people from different parts of life, male, female, different races, different ethnicities, different sexual orientations, people from different social status or economic status joining Bitcoin, and we are seeing the diversity increase gradually. But it's still very much a white male, 30 to 45 dominated area, and so we need to be aware of what image we give to the outside world and how welcoming we are or how hostile we are to those who are trying to join, because Bitcoin only succeeds if we make it as diverse as possible. So yeah, that's a topic I really care about, and as I've said before, I just simply, about a year and a half ago, I took a pledge and I said, I'm not going to any conference unless they have and enforce a sexual harassment policy. It's very easy to do that. If you speak at conferences, you should expect that. You will notice I will not go to certain very large, well-known conferences happening, and if you wonder why I'm not at these conferences, usually it's because the organizers of the conference either refuse to implement such a policy or make a joke of it and don't really enforce it, or because the lineup is almost entirely male-dominated. One of these conferences I went to recently took some of the best speakers in the space and put them all on a single panel called Women in Bitcoin, which was a complete joke. I mean, here you had VCs and investors and lawyers and smart contract specialists and all kinds of bright people who had lots of interesting things to talk about, but they were put on a panel to talk about the fact that they were female.
Right.
That's not diversity. That's a joke.
Well, let's hope that Satoshi is a woman then.
Well, I like to think that she is at a conference, and maybe you'll meet her.
That would be great.
Okay, well let's wrap up. Any questions? Any more questions?
I can tell you I get a lot of death threats and hate mail for saying that too.
Well, I think it's reasonable. Diversity is a good thing for the Bitcoin sphere also to get to more wide-scale adoption and to get a better, let's say, a better ambience within the industry. Any other questions, maybe from Annet, Jop, or Tuur before we wrap up?
No, thank you.
Well, thanks, Andreas. Tell us a bit more about your book and where. I think it's also available for free because it's open source. But tell us a bit more about where we can get your book and what the audience is.
Thank you. The book is called Mastering Bitcoin. It's been a work that took about a year and a half to finish. It was published on December 11th. It's available on Amazon.com, Barnes & Noble, and the O'Reilly web store. You can buy it online as either a paperback from O'Reilly Media, which is a well-known publisher, or you can buy it as an ebook for Kindle, Nook, or any other EPUB, Mobi, or PDF reader. You can also find all of the source code of the book. It's under a Creative Commons license and available on GitHub for free. And the audience for the book is primarily developers, but generally anybody who's technically minded who wants to understand Bitcoin in depth can learn from that book. And I'm working now with some universities in order to use the book as a basis for an undergraduate course in computer science, or potentially as an elective course at a master's postgraduate level for finance, business administration, economics, and computer science. I've received enormous support from the community in this. Hundreds and hundreds of people helped with the book, reviewed the book, and supported me through this. So I'm very happy it's finally out. And I can tell you in the months before it was published, I never wanted to write a book again. And now that it's published, I'm already thinking about writing the next one.
Cool. And the audio version will be recorded by Morgan Freeman, right?
Yes, exactly. Either that or I'm going to read it myself, and that might be a possibility. We'll see. It's a technical book. You can't really do an audio version. I don't know how you read C++ code in audio version. It doesn't really work.
Well, thanks, Andreas. We'll see to have you on the show, and thanks everyone, also Tuur, Jop, and Annet, and of course all the people that have been watching and asking questions. So it's a little bit more than half an hour eventually, but it's because we could have talked for a few more hours. I better understand Joe Rogan now. 3 hours is a bit too much, but 1 hour it filled easily with you.
Yeah, thank you so much, Paul, for hosting me.
Yeah, it was a pleasure. So hopefully we'll do it again in the future. See you guys.
Bye.
Thank you. Bye.